To understand all these charts, which is the ability that lets me generate numbers like these, or even these, simply by anticipating what the next move will be by reading these candlesticks. And to get to where the point that I am today, it's taken me over 5 years. And in this video, I will summarize my whole experience by reading these charts. First of all, it is extremely important to understand what is a chart. So what is a chart? It's a basic tool to see the price movement in the markets. And it is made up of real price and real time, where you can always chart absolutely any financial asset. This chart allows you to see the live price of any currency pair, any stock, any bond, any crypto, anything that has a price movement. You can see it on a live chart. And now, the real question is, what is the real purpose of analyzing these charts? And it is to identify where is the direction of the market headed. So you're able to guess whether the next move of the market is going to be to the upside or to the downside. And you're able to take advantage of that market opportunity. And the goal of all this is to make money. And in order for you to make money, you obviously have to risk money in trading. And to achieve this, there's 2 simple ways on how to do it. Very easy. Both of these will help you reach the same endpoint, which is to understand where is the direction of the market headed in order for you to go with it and generate money with it. The first is through fundamental analysis. Fundamental analysis serves us in the same way to identify the direction of price, but only with a different emphasis. In this case, it is done with economic data or news to cast the direction of the market. And the second, which is my favorite, technical analysis. Technical analysis is the way to understand the direction of where the market is headed. But this is by means of these charts that you see everywhere. And this is by looking at these technical patterns that happen time and time again in the market that allows us to understand and interpret what is going to happen next in the markets. And the absolute first thing we need to understand in the market is trend. The trend is your friend. The trend is basically the dominant movement of the market. And the absolute best way to understand it, it is by the higher highs and the higher lows. So the way you identify a bullish market is whether it is creating higher highs and higher lows heading to the upside. Without a higher high or higher low, it is absolutely impossible to have a bullish market. Bullish means that the market is heading to the upside. And then if you have a bearish market, it consists of lower lows and then lower highs. It is absolutely impossible to have a bearish market without lower lows and lower highs. Bearish means sells, bullish means buys. So now understanding this, which it is extremely key to success in trading, next are the areas of where you enter a trade. There are very specific zones in price where they have lots of buying opportunity and selling opportunity. There's very specific zones in the price where there is lots of buying or selling interest in the markets. This is where price accumulates to change the direction of where the market is headed. And there are 2 types of areas. The first one being support. Support is almost as a floor. Once price gets to this area, it simply can't break through the floor. So what does price do once it gets to this area? It bounces off. So you're always looking to buy price at a support level in order so you head to the upside with it. The second type is going to be a resistance. Resistance is almost like the roof. So once price gets to the roof, it can't break through the roof, so then it rejects it, and then it heads to the downside. If you're anytime looking to buy a market, you have to buy at a support level. And if there's any time that you want to sell, you have to be selling at a resistance, which is also known as the roof. And finally, we have the candlestick patterns. Candlestick patterns are features that are constantly being repeated in the markets without ever stopping. And this allows us to interpret what is the market doing in real time. And these patterns make a lot of sense at very specific zones. For example, you have the pattern of a head and shoulders. A head and shoulders, once it is formed at a resistance level, this is going to indicate that the market is going to head to the downside. So now that you have a resistance level and on top of that a reversal pattern, it is very strong indication that you're going to sell. You also have an inverted head and shoulder, meaning that you're going to get an inverted head and shoulders at a support level, which is going to indicate that you're going to bounce off of that support level stronger than continuing heading to the downside. Next, you have a break and retest pattern, meaning let's say you have a resistance level, price breaks through the resistance, it retests it, it uses it as a support level, and then it continues to head to the upside. Also for sells, let's say you have a strong support level, price breaks through the support level, comes back and retests it to continue to head to the downside. And there's many more patterns in the markets that are used as a reversal pattern to predict what is the market going to do at a resistance or at a support level. All of this is more than enough to make your first analysis in the markets and want to practice and execute it in real time. So let's put everything into practice that I've explained to you guys today. The first thing that you want to understand is whether a market is bullish or whether a market is bearish. If the market is bullish, that means that it is creating higher highs and higher lows heading to the upside. And if the market is bearish, that means that it is creating lower lows and lower highs to the downside. After you understand whether the market is headed up or down, then you need to understand an area of interest where you're going to use a strong support level to then buy or a strong resistance level to then sell. Once you're at this resistance or support level, this is where you're going to apply the candlesticks to understand a reversal pattern, such as a inverted head and shoulders, break and retest, double bottom, and much, much more. And that has been all for this video today. If you want to know more in depth about my set and forget strategy that allows me to generate numbers like these or like these every single week, and it allows absolutely anybody to generate anywhere from $1,000 to $1,500 a week using my set and forget strategy in under 3 months or less, click the link in the description. I have a video for you guys there that is going to explain everything in great detail. So not only take my word for it, but hundreds of my students that are doing it as well and living off of trading due to my set and forget strategy. So hope you guys found this video valuable, and I will see you guys in the next video. Stay tuned.